Hello and a warm welcome to Personal Finance. I'm Gugulethu, Cele. Today I'm joined by Aneesa Razack, who's the Head of Strategic Growth at FNB Savings and Investments, to talk to us about the all-important S word, saving, and making sure that you keep on track with it. Thank you so much for joining us today, Aneesa.
Thank you for having me, Gugu.
One can only call back or move back to January when we all had our resolutions and said, I'm going to save, I'm going to have more money in my back pocket. But we almost halfway through the end of the first half of the year, and a lot of South Africans probably aren't up to scratch on their savings.
Mm-hmm.
What does that tell us about our mindset and how we need to overcome that as South Africans?
So, Gugu, there are three main things that are barriers when it comes to saving, and it's very real barriers. I mean, when we look back to January and we think, why didn't I get there? And half the year is gone. I mean, our research shows that the biggest barrier when it comes to South African saving is the high cost of living. And let's face it, electricity is expensive, the cost of fuel is expensive, so it increases over the year, so that limits our ability to save. But to overcome the barrier of high cost of living, we need to think about money management, and it plays an integral role in our financial journey. So the key to sound money management is to having a view of these expenses.
Yep.
Obviously, there's some expenses that can't be compromised, like your fuel costs or your car repayments, your rent, your home loan repayments. But there are those guilty pleasures that if we go back in the year and we look at our bank statements, that we could have compromised on. So those shoes that I bought 3 times last month.
It was a sale, Aneesa, come on.
Exactly. So it's having that mindset that I am going to give up on some of those guilty pleasures and I'm going to start saving. That frees up cash, and the cash that you free up enables you to start that savings journey. The second barrier is procrastination. So we said, yes, in January, I'm going to start saving this year. And look, it's July. But what happened along the line? We spend at whim and we want to save what's left at the end of the month.
Yeah.
More often than not, there isn't much left. So it's that procrastination, and then we say, I'll get to it next month. Okay. So at FNB, we've coined a phrase saying, pay yourself first, which simply means instead of spending at whim every month and trying to save what's left, how about you pay yourself first? So we've made it easy for customers as well in the form of automating their savings through scheduled transfers. So what this does is every month you can set up a transfer to happen at the beginning of the month from your transactional account to your savings account, and you pay yourself first. And this is a way to overcome the barrier of procrastination. The third barrier, Gugu, is loss aversion. So if I want to save, I have to give something up today.
Yeah.
And many of us psychologically don't want to give that up. So here's a tip. During the year, sometimes you say, let's do it in January. How about you commit to this resolution when you have your pay increase? Because it's money you haven't budgeted for, and it's money that you haven't committed. So how about you have the mindset that says, some for now, some for later. So if your increase means 500 Rand more every month, take 250. You've worked hard, spend it. Take 250 and say for later, and start your savings journey. And that's how I think it's about understanding where we fall short in terms of barriers when it comes to our mindset, and overcoming those barriers through simple things.
It almost sounds though you take it back to the B word that I've coined here on the show, which is budgeting, and treating your saving as a psychological decision that you take, and almost treating it as an expense, like you say, by making use of the tools and products available to you. But maybe if we take a look at some of the offerings to save that are available on the market. For some consumers, it's very confusing because there's tax-free savings account, there's a flexi fixed deposit, there's a normal 32-day call account, there are retail bonds. How do they make up their minds? I know it's a difficult predicament, but I take it understanding what works best for the consumer's needs is a good place to start.
So that's a very, very real issue. And I know at FNB what we try to do is position the products in terms of customer needs. Because as a banker, I think 32-day flexi notice, I think 7-day notice deposit, I think FNB tax-free savings. But the consumer doesn't think in that jargon.
True.
The consumer thinks according to their needs. And the easiest way to decide which product is best for you is by looking at one category, and that is, how do you want to access your money? And if you look, that's how we've categorized our products at FNB. So access to your money immediately, that means for an emergency, I need access to my funds at an instance. Emergencies don't wait. If your tire bursts, you need your money tomorrow.
True.
And that's where your call accounts, your money market accounts come into play. Access to my money with notice. That means I'll know in advance when I'm going to use this money. So if I'm saving for an event, a special event, and if I know a week in advance I'm going to pay for, if it's my wedding, I'm going to pay for the wedding cake, then a 7-day notice deposit works. Access to your money after a fixed period means you can wait much longer. So I'm saving for a deposit on a home. The development is going to be launched in September, and I'm going to have to put this deposit down. And the reason why it's important for the consumer to understand their access needs is typically a financial institution will pay you higher interest rates the less access you need.
So if you're keeping your savings in for longer, you're probably going to make higher interest on that capital.
100%.
Makes sense.
So if the consumer can just think one thing, what am I saving for and how will I need to get my money out? And that's where all the products come into play.
What about the costs, though, associated with this? Sometimes as consumers, we're very critical and say, oh, but there's a fee for that, there's a cost over here. If I withdraw, there's another charge. How do we analyze that as consumers?
And rightfully so. Because in low interest rate environments, you're not earning much on your savings, on your short-term savings. So every little fee counts, yeah? So it's once again understanding the level of access that you need. So I'll put it simply in an example. If I had my emergency money in a 32-day flexi notice account, if I wanted to access that money, I'm going to have to pay a penalty to take that money out, which means I'm in the wrong product. The product is not right for me. So understand what your need is, select the right product so you don't incur unnecessary penalties and unnecessary fees.
Precisely. It goes back to understanding and consumers asking those questions to bankers like yourselves, I take it.
And that's key, is asking and understanding. Don't be blind to the fine print. Understand what fees you're going to be charged. At FNB, we don't charge monthly fees on our savings and investment products. So understand those, because that erodes the return that you get on your savings and your investments as well.
Something else consumers like to do, especially for all of us who have some kind of debt, is striking that balance between paying off your debt, making sure you save, and then also wanting high ambitions of saving where you have exposure to equity markets. That's often a difficult one to prioritize, but can you tackle all three at the same time?
Absolutely. I think we mustn't steer away from debt. There's healthy debt. There's reality. I cannot afford to buy my house cash, nor can I afford to buy my car cash. And I think many of us, many of us are in the same position. So there is healthy debt. But where it becomes tricky is where we want to finance those wants and not necessarily those needs using credit. And the reason why that steers us away from our financial roadmap is because the more we finance the wants on credit, the less disposable income we have. So that means that we commit more of our monthly income to repayments, which means any form of saving becomes more of an elusive goal over time. So I think the idea is it is possible to cater for all of them. You need to look at your savings in the form of creating an emergency fund, which is very, very important. And the reason being is we don't know when life is going to happen. And when life happens, we don't want to rely on credit because, as I said, it will steer us further away.
True.
And then retirement. We need to look at retirement because it's not about timing the market, it's about time in the market. Yes. So the longer you save, the harder your money works for you. And the reason for that is what we call compound interest, which simply means earning interest on interest. So the longer you're in the market, the better for you.
The seventh wonder of the world, isn't that what they call it? The eighth one,
Einstein said that, I think.
Precisely, the eighth one. But you mentioned something so interesting, and given the fact that we're halfway through the year, many people like to have fun towards December. We've got a couple of months before then, and I take it consumers need to prepare now instead of swiping their credit cards come holiday season and then finding themselves in the exact same position they were in at the beginning of this year.
Absolutely. So I'm a big believer that being too frugal is just like being on the far end of the spectrum. So yes, we are human and we want to have fun and we've worked hard, but we're going to be getting bonuses towards the end of the year. So it's about understanding now what money is in my cash flow towards the end of the year, what am I going to be doing? So if I'm planning a trip, for example, if I want to travel, don't plan it in the last minute for various reasons. You're going to be paying a lot more for those flights. It's a simple demand and supply rule. The more the demand, the less the supply, the higher the price. But also, you don't want to rely on credit for those travel. Whether you're traveling internationally or whether you're traveling locally, you don't want to be paying for that trip again next year. And you don't want to be paying more for that trip than what it's actually worth.
Precisely.
And the reality is, when the travel bug bites, it bites. And our rand is a lot weaker. So if you're traveling internationally, it's going to cost you a whole lot more than it ordinarily did. So the art is to plan for that now and not in November, to set money aside for those travel arrangements, or if it's purely just the festive period, because we have the psychological nuances of wanting to buy gifts for everyone, or we want to host an event at home. December is usually just more expensive, and you don't want to start the new year on the negative. And typically for December, we have enough time. So if you're not going to want to access that money, once again, put it in a product where you can give notice and earn higher interest on your money.
Aneesa, we've said quite a bit, but clearly the saving bug, I think, has hit not only myself, but a lot more viewers watching. But for those who need to remember the key takeaways points from tonight's discussion, what do they entail?
I think with it being savings month, there's a lot of focus on, am I saving enough? Am I saving at all? At FNB, we're saying, can you afford not to save? So the key takeaways: start small. Look at giving up maybe 1 or 2 guilty pleasures that enables you to start small. Just start sooner rather than later, because the longer you save, the harder your money works for you. And lastly, select the right product according to your needs, so that you're not in a position where you're incurring unnecessary fees and penalties come the time you need to take out your money.
Some solid advice coming through tonight. Thank you so much for your time.
Hopefully
that sets everybody on the correct path to start saving in order to meet their holiday needs this December. Well, that's where we leave it for Personal Finance this evening. A big thank you to Aneesa Razack, who's the Head of Strategic Growth at FNB Savings and Investments. Do get in touch with us on our social media platforms at CNBC Africa using the hashtag Finance410, or to myself at Gugulethu. Until next time, happy saving.